Direct Connection is made by MPT to serve all of our diverse communities and is made possible by the generous support of our members. Thank you. Live from Maryland Public Television, this is Direct Connection with Jeff Salkin.
Hi, everybody, and thanks for tuning in for Direct Connection. Right now, a total rewrite of the U.S. tax code is underway on Capitol Hill, but at the same time, the clock is ticking on last-minute year-end tax moves that could save people money. Joining us tonight to answer your tax questions are J.P. Crail, Assistant Professor of Accounting at the Loyola University Maryland Selinger School of Business, and John Lyons, partner in Gorfine, Schiller & Garden. Thanks to both of you for being with us.
Thanks for having us.
This is a little bit tough to analyze because they're still working on it. But broadly, based on what passed the Senate and passed the House, what are your impressions?
I mean, it's going to change things. Anytime tax policy changes, there are going to be winners and losers. One of the big things here is because the standard deduction is expanding, but you can't itemize as much, then people who tend to itemize, especially Marylanders, who would, say, for instance, deduct their state and local taxes, their property taxes, they're probably going to lose out. Whereas if you're in a state with lower, taxes, you're going to have that increased standard deduction. You may save money. So overall, again, we're going to have to see, but there are obviously going to be winners and losers.
John, is that how you see it?
I see it a little differently. I think that pretty much the same, but also that large families, because the personal exemptions are going away. So that will hurt people with larger types of families. Also, what's going to happen is they'll, because the standard deduction is increasing to $24,000 for a married couple, what will happen is that there'll be less incentive for incremental charitable giving, other things that could change the dynamic of the way people deal with their taxes.
Okay, so that gets us right into this year-end tax planning question. So somebody who, and I recognize, one, the bill's not done. Two, everybody's situation is different. But somebody thinking about making a charitable contribution before year-end, might there be more reason to do it in 2017?
I believe there would, because with the standard deduction being much lower and 13,000, and with the personal exemptions, you actually would probably get a bigger benefit because you have to get over the standard deduction before you start getting a benefit. Currently in Maryland, with state income taxes, which are some of the higher in the country, and property taxes, those will get you over the hump, and then all of a sudden your charitable deductions will be much more valuable to you. And also, one of the things you might want to consider is if you had appreciated property, especially with the stock market doing what it's doing, and you've decided that you have some charitable desires, what you might want to do is give an appreciated security to whomever you're donating any cash.
And explain the reason that people like to do that.
The reason is that you don't have to you get the full deduction for the full fair market value of the security without the burden of claiming the income on your tax return. So were you to have a stock that you bought for $1,000 and is now worth $10,000, you would get a $10,000 deduction on your tax return without the burden of actually claiming that $9,000 income amount as a capital gain.
Okay, so that's some spending that people frequently think about at the end of the year on the income side. To the extent people can control their income, probably not if you have a W-2 kind of job, but if you're a freelancer, you're self-employed, what's the typical year-end advice, and does this bill change that?
I can tell you, I mean, if you're able to push off income into next year, if you believe, in other words, that the brackets are going to be helpful, because remember that the tax brackets are going to be changing. So income that might have been taxed at a certain percentage this year might be taxed at a lower or a higher percentage next year. So the thing is, I mean, in some respect, it's a little like gambling. You're trying to figure out when I want to place my income. But if you have that control and you're willing to do your homework and try to figure out when the income will be more highly taxed, then you can either drag income from next year into this one, or conversely push income from this year into next year.
Right. Yeah.
And on I guess the last big thing for year-end planning that a lot of people do is maybe prepay that January mortgage payment. Make sure it's done in December. I don't know if you can. Well, I guess you could do it with quarterly estimated state tax payments. You could make that happen in 2017. Would that make sense?
Yes, I think it would, given that both the House and the Senate versions of the bill will take away the state and local.
Prepay all of your 2018?
Yes, you probably could. You're a cash basis taxpayer. There's no reason you can't. However, when you do something like that, you'll find yourself into the alternative minimum tax, because the alternative minimum tax adds back both your state and local income tax and your property tax. So you have to weigh that, and so that you can get the maximum benefit for your deductions. However, the deferral of any deductions into 2018 must be very carefully considered, since most of them are going away. What the Congress has almost done is taken what was the alternative minimum tax, although the Senate bill kind of preserves it but gives you higher exemptions. What they've really done is they've taken the alternative minimum tax and they've turned it into the regular tax, because they've taken away all your deductions for things like tax preparation, employee business expenses, all those things, they're gone.
They took away the tax preparation. I didn't know that.
Yeah, those things are gone.
Sorry to hear that.
What can I do?
Well, we've gotten into the weeds here a little bit. Let's find out what some real people want to know. Jenny in Cecil County. Jenny, thank you for the call. Go ahead.
Yeah, I guess I'm just wondering, I haven't seen anything published, but I was wondering if there's any changes to how rental property investments would be handled.
Okay, thank you very much. Seen anything?
Yes, there is going to be a change. There's going to be an additional amount there's going to be a limit on how much you can deduct even for active participation in rental real property, whereas there has never been a limit on that. And further, as long as you're active, which means basically that you spend enough time
that you're actually doing something.
You're actually doing it, and
checks,
you're really the only person doing it. You're not hiring somebody to handle and manage your properties. You'll be an active participant. And then you can take up to $25,000 of deductions, but that gets phased out in excess of income. That gets phased out between 100 and 150. I know I'm getting in the weeds, but in the end, there are still going to be the passive loss rules, and those are very complicated, and there are going to be some limitations on how many losses you're going to be able to take, even in an active or more likely a material participation manner.
I was thinking this was going to be bad for CPAs. The deductibility thing, the idea that people might be able to do their taxes on a postcard, it sounds like you'll still be busy.
I spend no time worrying how many brackets there are, and I spend all my time measuring what is income and what is not income, dealing with things like when people defer income to the next year, did they have a constructive receipt? Did they have enough control when they moved it into next year that in fact it's this year? Those types of issues are what we spend our time on.
Avoiding audits, yeah.
Back to the phones, Carroll County, this is Dale. Dale, thanks for the call. Go ahead.
Good evening, gentlemen. Thanks for the opportunity.
Yes, sir.
The opportunity, it takes effect for us individual taxpayers on April 15th of 2018. And the second question is, what is the impact on Maryland state of income taxes, since we're an adjusted gross income state?
Excellent question. So the easy one is this takes effect January 1, we think.
Sure. I mean, if there's going to be a tax change, between now and the end of the year, even though tax day is traditionally, April 15th, still that's for the past year. So these changes will be in effect for all the income earned and all the expenses you incur starting January 1st.
Okay. Now, when it comes to Maryland taxes, it gets complicated. I mean, we mentioned the idea that Maryland has the highest percentage of people in the country who itemize, who do not take the standard deduction. And there's some trickle-down stuff in here, particularly with the estate tax, that might make the Maryland legislature need to do something in an election year. What do you think?
Well, I think that the caller talked about adjusted gross income, which is where you start, okay, with Maryland. In Maryland, you add back, you don't get a deduction for your Maryland income taxes. And so you do get a deduction for your property taxes, which both the Senate and the House have married up, and they are okay with $10,000 worth of property tax deductions. But neither one is going to allow the state tax deductions, but that's not going to really impact Maryland. Now, itemized deductions, things like that, will impact Maryland. And
because they just take whatever you do on the federal form and it goes on your Maryland
that's
form.
true.
After a couple
that's
of reversals,
true.
yeah.
Yeah, and but you know, for depreciation, a number of other items, the Maryland legislature has broken with the federal government and done things differently. Maryland may, in fact, do that in the future, or may retain some of the deductions that we're seeing lost.
And there's also been some reporting after some pushback on the deductibility of your state and local taxes that perhaps the final bill might allow up to $10,000 of either property or state and local.
And possibly even sales.
Back to the phones, Franklin County, Pennsylvania. This is William. William, thank you for the call. Go ahead.
Yes. Did I understand something? Should a person that pays quarterly income tax prepay before next year to benefit from it?
We'll get you an answer on the air. Thank you.
Yeah, I would
Maybe
do that.
was the answer.
Yeah, but I would look at it pretty hard, because even if you end up in alternative minimum tax in 17, you're not getting a deduction in 2018.
That's just not
so
gonna happen.
It's something I would look at pretty hard, and really the difference between paying in you know, prior to 12/31 and when it's due on January 15th is not all that much time in terms of the time value of money or any other types of impact.
You're not going to be earning much interest in those
No,
2 weeks. Yeah.
No.
Loudoun County, Virginia. This is John. John, thank you for calling. You're on MPT. Go ahead.
Yes, I'm calling about medical deductions. I have a wife who is sick, and I have nurses coming in, and I've been able to deduct the nursing care for her because they come into the house. And I understand that deduction from the House standpoint was being canceled, but I understand there may be some provision in the Senate bill that would be still allowed.
John, thank you very much for the phone call. Good luck with that. And that is an issue that affects a lot of people.
Yeah, I'm very sorry to hear about that. But yes, the Senate bill is much more compassionate there, and in fact lowers. Right now it's 10%, and then if you're over 65, it goes down to 7.5% of your adjusted gross income. So it has to get over a threshold. There's like a floor, and you have to get over that threshold. Now the Senate is just going to go with 7.5%, and I think they're getting away from the 10%.
And opposed to the House, which was just going to repeal that part of the deduction completely, which honestly politically looked terrible. You're basically hurting the sickest among us. And so, yeah, no, it's a bit of a gamble depending on which version actually passes. But I got to imagine that it would be pretty much political suicide to say we're taking away medical deductions from people like our caller who otherwise might lose out on a lot of money.
People who vote. And we wanted to focus on advice people might be able to use or consult with their tax advisor for, not the political merits of what's going on. But one of the big things that is being talked about is the corporate tax rate, and probably not too many corporations watching this evening, but the pass-through entity tax rate. Is that a new thing? Do we currently have a separate rate for, and what are they?
The way a pass-through works now is that you generate income at the entity, but the entity itself does not pay taxes. The individuals who own the entity pay taxes in proportion to their ownership. So they're trying to disconnect that a little bit with the new law. There's a number of issues that come up with that. and it starts to get technical, but there are some issues associated with S corporations and reasonable compensation. So they're going to do some things there. They're going to do a safe harbor where 70% of your income would be compensation related, and the other 30% would be related to this new tax rate, which would be 25%. But unfortunately for lawyers, accountants, architects, all those other people, yeah, we don't get any of those benefits. We'll just have a regular pass-through the way it currently is, and we'll pay the full rates. But for people that employ capital, they're going to start moving towards and you'll be able to also use the facts and circumstances. So there's going to be a big change, a very big change in pass-through entities.
Mm-hmm. Let's get back to the phones. Sharon in Anne Arundel County. Sharon, thank you for calling. That would not be Sharon. The corporate stuff, the idea of repatriating offshore earnings. We can have an opinion here. What do you? The Republicans say that the whole package is going to make the economy grow faster.
Well, the idea is that right now there are a lot of big companies, and we've heard the names, that are keeping an awful lot of money offshore, because once they bring it back, they're going to have to pay very large tax rates on it. So the Republican strategy is to say, listen, we'll let you repatriate it, and you'll have to pay a much lower tax rate on it one time, because I'd rather have 10% of something than 35% of nothing. Now, whether that's going to be enough to spur domestic investment and kind of pay for itself with new growth, new investment, new employment, new spending, I don't know. But that's the rationale. And the idea is, again, to lower the rate to encourage that repatriation back.
And broadly, beyond the overseas stuff, just having a lower, whether it's 22% corporate tax, what's the argument for setting that number lower than what a lot of individuals are going to pay?
Again, it's the same idea. And I'm not saying whether I agree or not, but the idea is supposed to be that since employers are the job creators, then money they're not spending on taxes, they're going to spend employing more people. And again, the idea is supposed to be that it'll pay for itself through that increased investment.
And in the end, to get to the ultimate investor, so if you were to use an example of, say, $100, and you paid 20 cents of that in taxes, and you get down to $80. Well, when you get that out to your investors, through a dividend, you're going to pay another 20%. So you're going to pay another 16.
Double taxation.
I'm down to a few seconds. I'm curious if your phone is ringing or your client's calling up to ask, should I do anything?
Yes. Especially with the state and local.
Interesting. John Lyons, J.P. Crail, thanks for the time and the expertise.
Thank you very much.
Thank you.
We appreciate it. And when we come back, a visit to a historic landmark. We'll be right back.
Got an unused vehicle going nowhere? Donate it to the one place that can take you any place. Visit mpt.org/vehicles and support the programs you love on MPT.
The MPT app puts our programs right at your fingertips, so you can choose when to watch, what to watch, wherever you want to watch it. Download it now.
What happens in Japan and Asia matters to me. And with NHK World's newsroom in Tokyo, I get the news live from Japan right at the start of my day.
New ideas come out of Asia all the time. NHK Newsline reports on business, technology, and world events from Tokyo to Bangkok.
Once in the morning gives me a heads up on the competition.
Every hour on the hour, the news I want from Asia.
Watch NHK World now on Comcast Channel 268 and Verizon Channel 480.
Are you turning 70 and a half this year? If so, you generally have to start spending down your retirement account. Even the minimum distribution can place you in a sticky situation. Luckily, you can now use your IRA to make tax-free gifts. Gifts up to $100,000 will never count as income, but always make a difference. That's icing on the cake.
Make your gift for this year before December 31st. Visit mpt.org/support.
What was life like in 18th and 19th century Maryland? Here's Yolanda Vasquez.
Well, Jeff, in my travels, I have discovered that there are several Georgian-style homes worth exploring in Maryland, and I have stumbled across another one. We are here at the Montpelier Historic Site in Laurel, which at one point housed several generations of Snowdens. Joining me now to talk a little bit more about this unique home is the museum educator, Holly Burnham. Holly, how's everything going for you today?
Going great, thanks.
Let's talk a little bit more about this home. It was built in the 1780s. Talk to me about the person who originally came here to build it and the number of people who lived here all the way up until like the 1960s.
It was built by Major Thomas Snowden, and he lived here with his wife, Anne Ridgely Snowden, and their 5 children. It was lived in for 4 generations of Snowdens, and then it was sold outside the family to several different owners until it was taken over by Park and Planning in the early 60s.
So tell me a little bit more about the items that you can find. I'd mentioned in the intro that this is a Georgian-style home. That was pretty typical architecture for that time period, correct? Tell me more about that.
That's right. Yeah, this home was is a great example of Georgian architecture in Maryland. Even the landscape is very Georgian. It's set up on a hill. It overlooked at the time the Patuxent, which is now where Route 197 runs, and yeah, it's a wonderful example of Georgian architecture.
How many rooms, and how have you interpreted those rooms, and what are some of the artifacts that you can discover as you travel through?
We've interpreted the rooms, the layout of the rooms as most people use them. So we've got the parlor and the dining room just off of the main entrance. And we've got the lady of the house has her headquarters as well on the first floor, where she can oversee everything that's going on in the house. In the upstairs, we've got bedrooms, and we're actually standing now in the hands-on room for kids, where kids can come and do some activities to learn more about history.
What's 1 or 2 artifacts worth exploring? I know in one of the rooms you have this little black curtain with a little small mini portrait of someone pretty significant from the Snowden family.
Yes, that was the grandson of the owner of the house. His name was Colonel Thomas Snowden. His grandfather was Major Thomas Snowden. And we have a miniature of him that was done in watercolor on ivory by Anna Claypool Peale of the famous Peale artist family of Baltimore. And it's a gorgeous miniature painting.
I mean, it was actually that small when it was produced. I think that's the part that people maybe not catch. And the black curtain is to hide it from light?
That's correct, to protect it from light. We protect all of our artifacts from light. It's rather a dark place, but that's only to protect our artifacts.
It also doubles as a research library?
Right, the room that the miniature is in is a research library, and researchers can come and use our books. We do require them to stay on premise, but yes, we have a pretty extensive research library.
There's a great story about some famous people that stayed here. At one point, George Washington, who was a client of the Snowdens, stayed here. Also, Abigail Adams. Tell me about that.
Abigail Adams was traveling from Baltimore to D.C., and a friend told her to stay with the Snowdens because there was no place else to stay on the way. She was with an entourage of what she called her family, might have been servants and slaves included in that as well. She didn't want to impose on the Snowdens, so she didn't stop, but Major Snowden got word that she had passed by Montpelier, and he rode out to meet her and insist that she come back, and she did come back. She stayed the night with her party and wrote to her sister that she was treated with true English hospitality.
And that's interesting. You were able to find out a lot of history about this home based on a lot of letters that were written. Tell me more about that.
There were several letters written by family members and friends of the Snowdens because they did a lot of entertaining. And so people would write about their hospitality a lot. They would mention that they were well attended to by what they called servants, but the Snowdens did own 141 slaves. So there were quite a few enslaved people who also had their families and lived out their lives here at Montpelier.
So the museum is open pretty much throughout the year. You've been here for almost 20 years. What do you like the most about Montpelier?
Well, I actually like carrying on their tradition of hospitality, and we do a lot of programs for different kinds of communities. We have a needle art exhibit which draws a lot of needle artists. We do a kids program every summer for all the kids out from school. We have a woodturners event every couple of years. So we draw different communities, and I think we make this place a very welcoming place and a very interesting place for people to visit.
That is indeed. Holly Burnham, it was a pleasure to speak with you. Thank you so much for your time tonight. We really appreciate it.
Thank you very much for coming.
Thanks a lot. And if you'd like to find out more information about the Montpelier Historic Site, just log on to their website or our website at mpt.org. And I want to mention that they're part of the Blue Star program. This is a national program where active military and vets can come and visit a number of museums, including this one, for free during the summer. And of course, they'll have more information on their website, or you can check out the Blue Star program. All right, that'll wrap it up here from Laurel. Now back to you in the studio.
Yolanda, thank you. Thursday at this time on Your Money and Business, from funding to funding college savings to saving for retirement, we will have a look at money management basics. That's coming up Thursday, along with a Cumberland bakery serving Italian bread for over a century. Remember to follow us on Twitter at MPT News. You can see previous editions of all of our local programs online. Those videos are at video.mpt.tv. That's video.mpt.tv. Now, for all of us here at MPT, I'm Jeff Salkin. Thanks for watching Direct Connection, and have a good night.
This program was made by MPT to serve all of our diverse communities.